Kalimera, Athena. Good morning, Athens. It's so fantastic to be here with you today. It's my first time in Athens, my first time in Greece, and I couldn't be happier to be here with all of you industry disruptors and game changers, especially this week during Global Entrepreneurship Week when over 140 countries, entrepreneurs and entrepreneur ecosystem builders are celebrating all over the world with tens of thousands of events. So, and this, of course, is one of the greatest. So congratulations for being here. Thanks to Michal Stangos and Carla Tanas for inviting me and for their whole organization, Industry Disruptors and Game Changers. It's a mouthful. It took me a while to learn that. As I said, I'm very excited to be here with you today. Now, how many of you are entrepreneurs? So most of you. And how many of you are helping entrepreneurs build their businesses in whatever ways you are? And you can be both, right? Hopefully you are both. Fantastic. Okay, well right now I want you to do one thing. First of all, I want you to look to the right of you and see that person there. And then I want you to look to the left of you and see that person there. Then I want you to turn around and look at the people behind you for a minute. See the people there. Because if statistics are correct, only 1 in 10 of you will be here in 3 years having launched a successful business. So my question for you this morning is, if 9 out of 10 businesses fail, then what's going to make your business the one that breaks through to succeed? Well, over the years, I've been involved in 6 startups, all in the San Francisco Bay Area, though I'm now from Washington, D.C., and 5 of those with successful exits and raising over $200 million. And so what I want to do with you this morning is share with you some of the lessons that I learned over the years that helped transform and promote my businesses. Now, First, learning the technology here. The first lesson that we learn is that to have a really and truly successful and scalable business, you have to solve a real problem. A real problem, a big problem, a problem for which there's a market, a problem for which someone is willing to pay for the solution. And while that may seem extra obvious to most of you, you'd be amazed at how many people, how many of your pitches even later today, may come through, and even if you are actually solving a problem, may not well convey that. Let me tell you about my first business. In 1990, after I'd had a successful corporate career, first at American Express, where I rose to the level of head of marketing for Canada, and then at Bank of America, where I started as head of marketing for their credit card business when they were still headquartered in San Francisco, which is how I got out there. And soon after I began, was promoted to Chief Retail Marketing Officer. That means the head marketing and product person for the retail bank, for the consumer bank. At the time, Bank of America was on its knees. They had had lots of billions of dollars of loans, of loan losses in their commercial real estate and international loan area. But we turned the bank around based on our launching a whole series of initiatives, essentially being entrepreneurial within the corporate environment. And as a result, after 18 months, we went from being last to first in deposit gathering, number 23 to number 1 in consumer lending in the country, in the United States. It was a historic turnaround. It was the largest turnaround in American corporate history that was non-government aided. Now, Chrysler Company, the automaker, had been larger than us in the 70s, but they had been government aided, and we were not. Based on some of the successes that we had, there was a lot of publicity, as you might imagine, and I personally also received a lot of publicity because I was under 40, well under 40, and a lot of people were paying attention and saying, okay, who's this person? And as a result, many of the top banks in the country were trying to recruit me to join their teams. So I thought, now I have the basis for a business. I'm going to start a business. I'm going to start a consulting firm. And at least these companies, these banks, and my idea was to provide customized consulting services for marketing and product development to the banks. But at least these banks will return my calls because they know who I am. They may not hire me, but they'll return my call. So it's a good start. Well, actually, that concept was not a great concept. Why? Because I still hadn't solved a problem. I still hadn't figured out, what do these banks actually need? What is it that my consulting firm could actually provide to them besides generically talking about consulting services? That simply isn't enough. Well, lucky for me, one of my former colleagues from Visa, I think you all know Visa, the credit card company, approached me. She was the head of their member banking business, and she said, Shelly, we've just finished a survey, and the survey has told us that the number 2 problems that member banks all across the United States have is that customer attrition. That means too many customers are leaving them. They're losing customers to competition, in fact, to each other. Can you help us with that? Can you join? Can you work with our team and come up with some solutions for the banks? So voila. Big problem, customer attrition, in a big market, credit card business, with a willing paying customer, in this case my distribution partner Visa, and eventually all the banks. So we built out a business focused on customer retention. First, we developed a series of seminars that Visa paid for, so they became our first big client, for us to go all around the country to present these solutions to the banks. And then the banks themselves hired us to do the same. And finally, once we were solving their credit card problems, it wasn't that hard to translate that to other bank problems that they had. And last but not least, as we became real experts in the customer retention area, that we then translated that to other businesses that also had customer retention problems, like the mobile phone business, like the cable TV business. And so that's something that we became well known for. Well, over the years, built that company up over 7 years and ended up selling it to a larger consulting firm. And that provided us with the resources that we needed for our next venture. Now, as I mentioned, I was in the San Francisco Bay Area. Some of you may know that entrepreneurship in the Bay Area is actually a disease. Excuse me. It's not, even if you sell your company, you never get rid of the disease. You go on to your next venture. And I think for those of you who are perhaps into your first startup, you'll find that too. The excitement and the fulfillment that you get, albeit it's a lot of hard work, will be something that will be so rewarding that would be very, very hard for you to go back to a classic or traditional job in the corporate sector. So, having learned this lesson of that, to build a big business, you need to solve a big problem with a customer willing to pay for it. I was looking for the next great problem to solve and the next great business to start. And while I was looking, through the networks I had created, the opportunity found me, which taught me the next big lesson, and that is to tap your networks. Now, sometimes we get so busy running our business and, finding the customers, we forget that one of the most important, crucial resources is not funding per se, it's the networks that you build and the people and the resources that you're able to tap. So whether you do that through building advisory boards or an actual board, whether you do that through events like this, whether you do that through organizations that you join, however you do it, it's an essential tool. Now, at the time, I was approached by a former client from the first business that I just sold. He was the CEO of what was then the top subprime lending business in the United States, the Money Store. At the time, the Money Store was a $17 billion business, and he wanted me to start a credit card business for them, which you can understand. That was a logical segue from where I'd come from. But I looked at his business, which was home equity lending. I don't know if you have that in Greece, but that's not mortgages where you buy your house. It's a loan that's on top of your mortgage that lets you use the money for either improvements on your home or varieties of other things like education for your kids and so forth. But on reflection, I had a better idea. I really felt that the Money Store would never be competitive with the economies of scale that big banks had. But I thought a big opportunity that was sitting there in the marketplace that they could tap into was all of the big banks that were doing home equity lending, but would only lend to high credit rated folks. I thought that the Money Store could pick up all their declines, all the people they turned away, because the kind of business the Money Store did was to what we call subprime or lower credit rated people. So I presented the idea to the CEO. He liked it, gave me the go-ahead. I gave me some financing to start building a team, and I built a team to begin the strategic alliance business. And we started going after the top 10 banks, and guess what? really taught me the power of networks. First, the network, my former customer, was my first customer in this business. Secondly, who was I going after? The people who had already been my clients. 7 of the top 10 banks in the country had been my clients in my first business, albeit this was a very different business. And of course, I started going to them. At first, I went to my alma mater, Bank of America. And in those days, Bank of America turned down over $3 billion worth of loans, that's with a B, every year. When the money store did their due diligence on this decline portfolio, they found that they would have approved over 90% of those loans. So imagine that, almost $3 billion worth of loans sitting there. What a win-win for both organizations. The banks that had already spent all their marketing money, their processing money, whatever, were losing money on these customers and making them unhappy. Here they have a chance to make them happy by referring them to a lender that's going to lend to them. And the money store, of course, making money on those loans. And then thirdly, not to speak of win-win for me as the broker of that deal, or of those deals. So that's how that business began. So talk about the power of networks. Now, research shows that across many sectors and levels of management, key contacts and networks are the primary source of both new jobs and new business opportunities. So how many of you found your current job through somebody you knew? Just a few of you. I'm seeing right. How many of you found it through an online ad? Nobody? I mean, realistically, that speaks to what we're talking about here. So we have vast stores of information online. We know that there are opportunities that we can see online, but in the end, unless and until you connect through your networks to someone, it's hard to realize that opportunity. And that was certainly true for me. Now, at the time, going to my next idea, being open to new ideas. If you had asked me if I consider myself an open person, I would have probably said yes, with the exception of one thing, an important thing, and that was I was a real technophobe. Now I know you know what that means. I was told yesterday it's almost the same word in Greek. So, and of course phobe comes from the Greek, so don't have to translate that. But I was afraid of technology, so even though technology enabled our businesses, it was not something I personally was very prone to. And the year was 1998, and with personal computers and web browsers just beginning to take hold, those online were mostly early adopters. So while pursuing the strategic alliance business I just described to you earlier, I recruited a guy named Glenn. And Glenn was one of these early adopters. In fact, he was using the internet in those early days when very few of us were. And he was using it for research. He was using it to research the background on the banks before we went to call on them. But while he was doing that, he also discovered that there were some new services coming online to make loans. In the United States, one of them was called LendingTree, and the other one was called GetSmart. And what they did is they aggregated customers, consumer customers online who were looking for loans, and then they were starting to look for lenders. And Glenn said to me, Shelly, we really ought to go online here. And I said, don't bother me with that stuff. I don't like it. I'm afraid of it, whatever. But good for Glenn. He didn't give up. He was a good entrepreneur. He persisted. He finally persuaded me that we should do a test. Just a small test, he said. Okay, let's do a small test. We go online. We do a small test with both these brokerage firms, LendingTree and GetSmart. And within the first 8 months, we end up booking over $100 million worth of home equity loans. That was our small test. And a year later, we'd booked another $300 million of home equity loans on the internet when, this is way before Amazon and everybody else. This was, some of you are probably too young to even realize what those days were like when you're so accustomed today to touch your phone, buy whatever you want. These were the early clunky days of the internet, but still we were able to generate that kind. And it was because we were one of the first 3 lenders on the web. And so and of course we were also able to build our business with the money store that way. And by this point, we were also owners of some of money store stock, so that benefited us all the way around. It was, again, a win-win situation, a mutually beneficial. Now, it definitely taught me to be open to ideas and possibilities, even when they make you uncomfortable, even when they're out of your comfort zone. If you don't get out of your comfort zone, you will never, never succeed, because every one of us has things we're comfortable with and things that we're not. And you've got to push yourself to that next level and push yourself out with these new ideas, disrupt in order to make progress. And while I can't say that I was visionary enough to predict, so not only did the Money Store experience teach me to leverage my networks and stay open to new ideas, but it persuaded me that the internet was going to be make my successful track record offline. So remember, by this point, I'd built an almost 20-year record offline. It taught me that it was going to, be obsolete if I didn't transition. So I did transition, and I decided to leave the financial services industry in my next venture to gain leading edge experience on the web. And just a couple of months later, I partnered with a woman named Mary Furlong, who was the founder of a company called Third Age Media. And I was the chief retail marketing officer to develop a web portal for baby boomers. Mary was a visionary in the boomer space, and I brought my experience in both online and offline marketing to the table. We all thought we were onto something big, but none of us realized how big it was really going to be. So that's the next thing, is think big. Adapting our model continuously, even before the word lean startup model ever existed, led us to eliminate losing strategies and focus on successful ones and grow organically by double digits every month. And that was simply translating our offline direct marketing strategies to online. But the biggest breakthrough came when we landed a deal with AOL to power the baby boomer part of their website. And this is in the days when AOL was the main website on the web. They were the Facebook of their day, if you will. And once we linked up the two websites, our growth was exponential. So we began with a big idea. In fact, not only exponential, but it made us one of the top 10 fastest growing sites on the web in 1999. According to the industry standard at that time, the Web's feature magazine. So we began with a big idea, partnered with a big player to amplify our vision and our outcomes. So I won't say it wasn't scary, again, getting out of our comfort zone, but it was the way to make a big breakthrough. I'm rushing here because I have a little flashing light here that says my time's up, and I'm not done. So funny how when you practice at home, it works better. After we identified our engine of growth, funding became necessary. Now, some businesses are able to bootstrap their early stage growth, and that's essential. If you really want big financing later on, you have to demonstrate that you can generate revenues. Well, we already had some early supporters as investors who saw to it that we had just enough resources to support our early expansion. And so we had, obviously, friends and family. We had, as well, a mid-sized venture firm that owned a very small share of the company. Now, these VCs, though they didn't own a controlling share, were very essential to our business because in addition to the funding, they offered us three other things. They were experienced in growing companies, so they really helped us understand the kinds of things we needed to do. So finding those kinds of mentors is essential. They also had other networks of investors to tap, something that we didn't have, obviously, as early entrepreneurs. And they gave our woman-founded and led team, credibility in the mostly male venture world. So this is another tip for you ladies out there who want to be entrepreneurs. Making men your champions, even as your women friends and family are already your champions, is essential. We were able to close on a third round of financing for over $100 million. It was the largest media financing that year for any media company. And it really helped us fulfill our potential with AOL. Because though we could have continued to grow incrementally without that funding, there's no way, I don't think, that we could have scaled to support the kind of volumes that were coming through with AOL. So how were we able to get this funding? I think this is essential. First, we built on the networks of people I just described to you, again, tapping your networks. Second, we built a product that solved a big problem and had customers willing to pay for what we had to offer. In our case, it was advertising to reach the large audience of boomers that we had aggregated. Third, we operated on what's become known as the lean model today, but we just knew it as minimum resources to get the job done. And finally, as we approached our largest investors, and this is really key because a lot of you are going to be pitching later, we had a model that would scale and for which there was a profitable exit. And something founders seeking funding often forget when running their businesses day to day. We get so busy. Now, I've seen many entrepreneurs pitch their businesses, and too often they're unable to demonstrate the payback or the exit strategy. These are major inhibitors for any investor. Today, I am an investor, and I can assure you that, like every other investor, those are things I look for. So keeping this in mind when searching funding. So as entrepreneurs, while we may be concerned about how to break through, we need to be confident that we're smart enough, resourceful enough, and capable enough to make it happen, which leads me to something that the author Ayn Rand said. The question isn't who's going to let me, but who's going to stop me. And I'm looking forward to coming back to Athens and Greece, and not just seeing 1 out of 10 of you in these seats in 3 years, but seeing every single one of you having had tremendous success with the support of organizations like industry disruptors, game changers, as well as others sitting around you today to make it all happen. Thank you very much. Ευχαριστώ.